It is a very warm welcome to the start of the second month of the year, February. I am Melissa Enoke of the FMDQ studios in Lagos.
And I am Grace Agbaragu with your Monimos.
All right, let's tee off with your news now. Ethiopian authorities are set to launch an over-the-counter treasury bill trading platform and secured repurchase repo market in 2026 as part of efforts to deepen the domestic government securities market and improve liquidity management. The initiative, developed with technical support from the IMF and World Bank, aims to strengthen the local currency bond market and move toward market-driven interest rates. The repo market will operate under an Ethiopian master repurchase agreement, enhancing collateral value and tradability of government instruments while supporting secondary market development. In earnings news, First Holdco reported a sharp drop in full-year profits despite strong interest income growth. The group's interest income rose 23.6% to 2.96 trillion naira, boosted by higher earnings on loans and investment securities, with net interest income up 36.3% to 1.91 trillion naira. However, credit impairment charges of 748.13 billion naira to clean up the balance sheet reduced net interest income XLE to 1.16 trillion naira. Non-interest income fell 52.2% to 338.66 billion naira, while operating income dropped 13.3% to 1.50 trillion naira. Operating expenses rose 36.1% to 1.27 trillion naira, pushing the cost-to-income ratio to 56.5%. As a result, profit before tax fell 71.2% to 229.10 billion naira, and profit after tax plummeted 92% to 52.75 billion naira. Meanwhile, the Bank of Namibia has highlighted the importance of investing in STEAM education, science, technology, engineering, arts, and mathematics as a foundation for skills development, innovation, and long-term economic growth. The central bank says strengthening STEAM capabilities is key to preparing young Namibians for a rapidly evolving digital and knowledge-based economy. Let's listen.
It shows that Namibia has significant potential for a digital economy, supported by robust digital public infrastructure, and most importantly, with a population of 3.03 million people, and yet it comes, 37% of our population being under the age of 15 years. This youthful demographic of our country is well suited to adopt digital technologies and financial innovations much faster, thanks to their greater familiarity with technology and their lesser dependence on outdated systems. So if we compare and contrast this youthful nation and this youthful demography of our nation with older countries, I don't want to call names, but they are countries with very old populations, we are better suited to grow as an economy, to grow our skills and our expertise, because we are more comfortable with technology than countries where the population are quite older. So we sit with a golden opportunity within our hands. We must just use that opportunity. So the urgency of STEAM learning and education globally has exponentially grown over the past years. According to UNESCO's Institute for Statistics, countries that systemically invest in science and technology and innovation education experience much stronger and much more resilient economic growth. Alarmingly, and this is the worrying part, by 2030, the world could face a shortage of up to 69 million skilled workers in science and technology fields, jeopardizing global progress in sectors that drive productivity, energy transition, and digital infrastructure.
In other news, Cameroon has ratified bilateral air transport agreement with Qatar in a deal signed in Doha on January 16, 2025, which provides a legal framework allowing Qatar Airways to operate in Cameroon, aiming to expand the country's international flight network and strengthen links to the Middle East and Asia. The ratification followed the National Assembly's December 2025 approval authorizing the president to validate the agreement. The move is expected to increase competition and impact passenger fares. At the Zim Papers public lecture series, the Mutapa Investment Fund has been highlighted as a key pillar in Zimbabwe's economic future, with discussions focusing on its role in mobilizing capital, driving strategic investment, and supporting national development priorities. Here are excerpts.
The performance as highlighted in the annual report of 2024, we showed that the fund has got assets under management, gross value of 16 billion, with a fair value of 14.7 billion, and that within the fund, the fund by itself had income of 11.9 during the first year of operation, and made a profit of 80 million. And of course, if you look at the fund, we also gave the statistics which we thought were relevant, like gold production in tons, because we've got the fund, its assets, they are one of the largest producers of gold in this country. So and also for Fidelity, all the gold comes through Fidelity Gold Refinery, which is under the fund. And the gold that we got, which is a very important statistics, was 36 tons, 0.4.
In the meantime, the International Monetary Fund has said progress in the financial and operational restructuring of Ethiopia's sugar estates is clearing the way for the restart of privatization. The IMF noted that several estates have returned to positive EBITDA after debt restructuring and operational reforms, prompting authorities to plan new valuations ahead of a renewed and transparent privatization process. At the Cardinal Stone Investors Conclave 7.0, leading voices from policy, finance, and industry came together to examine how Nigeria can future-proof its economy and the strategic choices that will shape the country's direction in 2026 and beyond. Let's now listen.
The recapitalization is a step in the right direction. In terms of delivery and expectations, when you have reforms and recapitalization, basically you will have consolidation. So that's given. It's happened with the banking sector. Remember, in 2003, we had over 89 banks, and then there was consolidation, and then boom, just about 22, but very big players, which led to increased capacity. And of course, at that time, it also felt like it was. Funny enough, it was 25 billion for recapitalization at that time, and it's 25 billion for composite insurance companies today. So just a coincidence. Although when you look at it in terms of naira, dollar, that was maybe about $200 million at that time versus just about less than $20 million today. So what's the expectation? The expectation is that we will see consolidation. Players will come together, merge together. We expect it to be more domestic-led than foreign-led. but we will see consolidation. A number of players will be edged out. Obviously, there will be mergers. And then there could be a bit of foreign, should I say, entry, but we'll be very, very select. But overall, we will see that there will be a contraction in terms of the number of players, but it will position the industry to be able to write better insurance and underwrite higher risk. The recapitalization.
Finally, on News Now this Monday, African Development Bank has launched a $1 million technical assistance program for Crédit Agricole du Maroc Group. The funding will help strengthen GCAM's institutional, operational, and financial capacities to tap concessional and private capital, structure and finance green projects, and monitor climate impact. Target sectors include sustainable agriculture, rural development, water management, clean energy, resilient infrastructure, and connectivity aligned with international climate finance standards. I am Melissa Enoch, and that's it on News Now this Monday. The show returns shortly with Grace at the FMDQ Archives Room, giving us our market updates. Stick around.
One thing I loved about the report and the issues that it highlights is it really shows how the importance of technology, the digital transformation, particularly with regard to financial inclusion that has taken place in the region over the years. I think, honestly, of course, I'm biased, I'm talking my book, but really difficult to think of a region that has been impacted as much by digital transformation as Sub-Saharan Africa has. Particularly in the area of digital finance, leapfrogging we've seen in action. I remember I was based in the mid 2005-6 in East Africa in Kampala, and I remember when M-Pesa was just being rolled out in Kenya, and there came a point when, I don't know, about 10 years ago when I was in Nairobi, wanted to make a payment and I couldn't because I didn't have an M-Pesa account. I had to scramble to exchange dollars for shillings to be able to make payments. And this was not quite, it's outside Nairobi. So the penetration of digital finance, technology use at all aspects of life is really just incredible. It has allowed leapfrogging, it has allowed it has had an impact on social life, political life, way more, including the dissemination of information.
Welcome back to Money Moves. Let's now go over to Grace for today's market updates. Hello there again, Grace.
Thank you, Melissa. Let's now track how the markets opened trading for the month. Starting off with the equities, the Nigerian Stock Exchange was broadly flat, down up 0.01% to 165,275.02, while the BRVM slipped 0.13% to 364.45. The Nairobi Securities Exchange jumped 0.86% to 196.72. In South Africa, the Johannesburg Stock Exchange fell 1.17%, and in North Africa, Egypt's EGX 30 declined 0.12%, while Morocco's MASI dropped 1.25%. Let's do a quick round on some of the Pan-African currencies. The rand weakened 0.51% to 16.05 against the US dollar. The Egyptian pound eased 0.35%, while the CFA franc slipped 0.72%. The Kenyan shilling was unchanged at 129. The Moroccan dirham softened 0.26% to 9.14, while the naira fell 0.72% to 1,394 naira 84 kobo as at 13:25 GMT. Let's switch into the commodities data deck, beginning with energy prices. Brent crude slumped 4.86% to $65.95, while US WTI dropped 5.17% to $61.84. Natural gas plunged 16.97% to $3.61, and Arabic gasoline fell 4.19% to $1.86 as at 13:18 GMT. Now, finally, two metals prices. Gold rose 1.44% to $4,782, while copper slipped 1.82%. Platinum edged up 0.34%. Aluminium declined 3.70%, while iron ore eased 0.14% to $105.62 as at 13:19 GMT. And that's our Money Moves markets today. Back to you, Melissa.
Grace, thank you very much for those updates on how the markets wrapped up on the first day of the week. And that's it on today's edition of Money Moves. We hope that you enjoyed the show. From all of us here at the FMDQ studios, we say thank you very much for watching and bye for now.